Hello and welcome to chapter 11 of the Accounting Insight tutorial series. In this chapter, we deal with the trial balance. The trial balance is a list of values and balances reflecting the transactions that we've been recording over the year, in this case for our company here. I'm going to show you how to compile the trial balance from the records we've been keeping. In the book, I've done the first two, but I'll do those as I demonstrate to you how to get them. In the trial balance, we show each account on the left here, and then in the first column on the left here, we show the debits, which are flows in generally, and the last column on the right here, we show flows out, credits. So we start off with our sales, and I got my worksheets here, and if you have downloaded these from the website, you can use them in Excel, or if you're using paper, you need to print them out. You just find this page. In here, because I'm using Excel, I've opened two windows so that I can see where and link in directly to the records I've been keeping. So the first item we need to list out is the sales. And if we go to our sales invoices, the value of sales that flowed out of the business, you remember, is there. So I'll just put that in there. Using Excel, I'll just press equals and link it to that figure. If you're doing it on paper, obviously write it down. The next item to list out is the trade debtors. Trade debtors represent cash that's going to come in, so it will be a debit balance to flow in. Again, if you look at our listing, chapter 1 and chapter 5, our trade debtors, if you remember, are there. So we link that in. The next thing to list out is the purchases of goods. And this we did when we were doing the purchase invoices. If we go to that tab, you can see the purchases of goods is there. So we link that in. That's flow of goods into the business, so it would be a debit. Link that in. And the next thing is going to be trade creditors. So our suppliers who we haven't paid yet, we will have to pay them. That will represent cash going out of the business. That's going to be a credit. So if you remember again from our analysis of purchase invoices and the amounts outstanding, we got our trade creditors listing here. So 34 and the 5875, total 9098. The next is the rent we paid out. So this we can see is listed also in our purchase invoice analysis there. So that is the value of rent or services we got from the i.e. the premises we're using for trading. That will be a debit. Put that in there. Next would be the phone expense. You can see it there, link it in, £47. And the next will be motor expenses, and we've got them there, so just link that in. And then the next item here is the van cost, so we've got the van asset, so put that in. Next item is stationery, it's here, so I'll just go into just that cell, pull it out, link it in, it's there, 29. Next item is insurance, it's there, you can see it, so we link that in, pull it out. So all these are flows of services or goods into the business, so they're debits. And then we got here, interest on cash left on deposit. So by providing the bank with cash in the bank account, we've given the bank money that they can lend out, and for that they pay us interest. So it's the value of our service of lending to the bank. So that will be a credit, and we would get that from our bank receipts analysis. If you remember, click on bank receipts, you can see interest received there, £10. Share capital, so the owner of the business, if you're the owner of the business, this would be the money you invested in the business, and the business owes it to you, so it has to pay it back to you at some point in the future, and therefore it would be a credit. And again, you'll see that in the bank receipts, and it's there, £100. Take that. And we come to bank charges. So this is the services that the bank provided to us for processing the bank checks and bank receipts, and sending us statements telling us how much cash we got, and that will be in your bank payments file. Press equals and go to bank payments, you get your bank charges there, 10. And the next will be drawing. So this is the amount that the owner has taken out, i.e. yourself. We'll call them dividends. And again, they'll be in the bank payments. If we go into bank payments, you'll see it there, £900. And the next item will be motor tax. Again, this we didn't get an invoice for it, we just paid it direct from the bank, so you'll see in your bank payments analysis. Motor tax there, £75. And then we'll have to list the bank balance, so the cash that we've got with the bank, and this will be in our bank account record, which is here, our bank summary. Now, normally the bank statement says you are in credit when you've got cash. That statement is their statement saying that you are a creditor to them. But from your point of view, the bank is a debtor to you and actually is holding your money. So this would be a debit balance. Just put that in there. Obviously, if you are overdrawn, it will be a credit balance, i.e. you owe the bank money. And the next one is our VAT account. So our VAT account, if you remember, we go here. We said we actually owed money to the government of £970, so that would be a credit. And then we're going to go to our wages expenses. Now this, we haven't prepared a schedule for it, but we'll go to our book and we'll go to the chapter on wages, which is chapter 8. And we had a recording of what the entries should be. So the first one, wages expense, we got it there, £1,000. So just type that in. Next one, employer national insurance expense is there, £120. Type that in. And then next one will be the tax and national insurance that is due and payable to the government, so that would be a credit. And if you remember our double entry, so we had our expenses and then our liabilities. So we got £420 national insurance tax payable to the government, 420. And the last item is the net pay due to the employee. We worked out was £700. Put that in. And there we go. This is the list of all the transactions we've been recording for this company. And as you can see here, the balance of debits is equal to the balance of credits. And that is your trial balance. So in summary, your records have faithfully entered each transaction correctly using the double entry system. And as we said earlier, this is very important for, or was very important for manual accounting, where it was kept on paper. And if it didn't balance, you knew something had gone wrong, so you tried to correct it. It doesn't mean all the accounting errors have been found. It just means your basic recording has failed, and you find out where you've missed an entry, and you just make sure your two columns balance, and then you can be assured at least you got your double entry recorded dutifully. It might be wrong, but at least you've done your mechanics correctly. Nowadays, with computers, the computer ensures every transaction has a debit and a credit, and they must equal. So automatically, your trial balance, when you run it off your computer system, will balance. It's very rare that computer system trial balance does not balance. If it does not balance, then something serious has gone wrong. And that is the trial balance. And it's the first step before your management accountant or your financial accountant will start preparing the profit and loss account and the balance sheets for the business. And they will start with your trial balance, and then we'll make some accounting adjustments, which we'll look at in the next chapter. Thank you for listening, and I look forward to seeing you in the next chapter.